Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. My name is Ben Maldonado, and as always, I'm here with my partner, Barry Hederachi. Barry, how we doing?
Doing great, doing great.
And a big week. We are
Big week.
recording here on Friday, the 8th of May, at about an hour after the markets closed. And what a week the stock markets had. I mean, the only thing that comes to mind when you and I were talking, Barry, was that the navigation of the Strait of Hormuz is not the only place where one must exercise informed judgment to safely travel. With where the markets have gone in the past month, past week, one needs a proven, reliable tool like square levels to make it through successfully. Given the trajectory that we see there, this straight up move, I mean, how much higher can we go? I mean, what we need to do to help people is to give them the levels where the likelihood another decision point gets made, or if we get below a certain level, the likelihood of going down is a lot higher than going up. And conversely, if we clear certain levels, the party's going to continue.
And the party has been continuing for a while. Well, for a whole over a month, ever since
Right.
we called out this low back in April, and just took off, which is fine. Now we'll cover I guess, the next chapter. We'll cover next week, see where we end up.
And I
And what do
think
you?
the
Go
I,
ahead.
I was going to say, I think the important thing, Barry, is that even at each of these decision points, you laid it out pretty clearly. Listen, if we stay above this level, we're going higher.
We're gonna go. Yeah.
Yeah,
Hmm.
but there's also, when you're at that point, there's also the chance that if you get stuck under the level, you could have some serious downside. And that's the beauty of the squares, is it gives us an objective point that where we could say this is not subjective. This is like a line in the sand. If we're above it, it's bullish. If we're below it, it's bearish. And that's kept
Absolutely.
us, it's kept us on the right side of the trade. And that's the most important thing.
Absolutely. Today, we're going to look at a number of these charts, and you'll be surprised what's coming up. And we haven't talked about turning points or CITs all this well for the last few weeks, and probably for good reason, because we really didn't have anything reliable showing up. But there are some things showing up starting next week. So maybe towards next week, end of next week, early the week after, we have some cycles showing up, and I'll show that to you exactly how that's showing up. And so it's time to really be a little bit cautious. When we talk about navigation, I think that's when it's going to come into play. So let's take a look at these things. And if you guys like our work or any part of it, please remember to click the likes and subscribe. It really helps grow the channel and with the whole YouTube algorithms and all of this stuff. Let's get back to the charts. Last week we talked about how if it's 7187 area, this area needs to hold. Why? Because that was a quarter of the square. And if it holds, we can expect it to go higher. And the fact that we cleared, way back in the day, we cleared the 7,000 level, and we're able to hold about 70.30. You can see how we did that with plenty of room to spare. Once we did that, we were expecting what naturally the next level would be the 50% level. We got there. Now, then we started peaking up a little bit, right? So we're starting here right about 73.50, 73.60. We're going to start coming into some resistance. Now, how far can this go? And what's the story here? Do we have any levels here? You guys can see I have 75.82, but that's really very high. 75.50s here on the board.
It's
We'll
not looking
see.
as high as it did last week
No,
when we did the
no.
show,
Or when we were at 7,000, right?
right?
So we have to sort of tie this together along with what's happening on the futures charts. So we'll take a look at that. So since we start on cash always, let's pay attention to this and work this through. 74.04 is, I think we dropped these last week. We want to watch that level going into next week. Why are we watching it? We want to see if we can settle above it or not. Not only settle above it or not, coming into a sort of a cycle high, which is what we have late next week. We want to look to see if settling above it is fine. We can move higher. Let's say we hit 7,500. Great. Okay, fine. On any kind of a counter trend, if we get below let's say 73.50, 73.60, and we can't recover that level, I think that's when you really have to watch it. So
Hmm.
what does that show up? As a pattern, we're looking at a lower high. And why are we looking at it in here? Well, we're looking at it because we have these cycles coming in. All right. Now that we can go into next week and potentially have a false break somewhere because that's common, right? We had one here. We had one back in February. So false breaks are very common. It's possible we have that, especially in this new sort of headline driven environment. That's possible. We're basically looking for it. The basic stance is to look for it to go into end of next week and then to reverse and to see if we can hold the support levels or not. So that's the theme. I think that's pretty simple. Do you have anything to add to that already?
No, just that 50% of the square is the key level right now, right?
Right, right.
Above
And
it, they can
mhm,
keep going, and below it, the chances are we're going to go down and pull back, test,
right.
or
And that's it.
minimally
Mhm.
consolidate.
Yeah, so let me give you guys the 73.64 to 70. That's kind of where that falls. Okay, so we have for the cash SPX, we have 73.64 we're watching. If we can hold above that, we can watch the continue, we can expect the market to continue to push higher towards 7,500, 7,500 being a good target resistant level, and that's pretty much as high as I would expect this to push. If we get to 75.50, I'll be surprised, but you never know, right? Let's
Right,
see. If we can get all the business done between here and 7,500, that'll be great. That'll give us 5/8 comes in here somewhere in between,
hmm,
somewhere, right in about 74.70 or so. So we're looking for that business well. Let me do what I always do. Drop a little, if we can take care of business right in here, we're in good shape. Yeah, Ben, go ahead.
I was going to say those are like little landing zones you put in, and the market tends to like to go into them.
Right, right. And the landing zone we had in for the
Yeah,
low, you can see, we got pretty close and stopped a little above, but that's all right.
yeah,
Anyway, that's it. That's so the main thing, you guys get the idea. We're looking for some kind of a CIT and we're looking for it to happen time-wise towards the end of next week. And price-wise, it's right in here. All right. So keeping that in mind, let's take a look at some of the other markets. Let's go to the front month. All right, coming off the April low, we are going into this is like May 18th, but we're coming about 90 days, 90 bars from the high, earlier high. The first high and the false break high were 108 degrees. Good enough for me. And we're also coming in at 45 degrees coming into,
yeah. What are the dates on those?
well, May 18th for the 46 degrees. So like 15th, May 15th would be 45 degrees because we have
Hmm.
the weekend in there. Very good number. Then we have a 90 bars coming up, high to high 90 is a very good one. Then we have 108 degrees. And these are fairly important numbers.
And those are also around the 15th.
Yeah, they're all between 15th and the 18th. That's kind of how it's adding up.
Nice.
Yeah, yeah. Price wise, we're heading up into 74.36. And if we take eighths, we have 74.81 is sort of the upper end of this. Let me mark that right now. So 74.81 would be the max I would expect it to go. 74.36, this area straddling this, falls breaking in here, consolidating in here, and rolling over would be ideal. Otherwise, if we flat out settle above 74.36 and started moving higher, well, great, let it go. Not like we don't have enough time, right? We can keep running, but
Yeah.
we're looking for this kind of a termination point, exhaustion point coming into late next week. And it doesn't mean we can't, do a correction, couple of day correction and, go up in there hard and terminate on a cycle. I was going to ask you, do you have any of your cycles coming in around there? I mean, it doesn't
Uh,
have to be exactly on that day.
yeah, yeah. We have I think a rebel yell coming up end of next week. So
Well,
they're
that's
right in
perfect.
there.
That lines up. So
And
we
you
have
know
a
what's
number of
crazy?
things.
Talking
Hmm.
about time cycles, you know what is crazy? Remember when we looked at that miracle on ice cycle to get that big correction into the low?
Yes, I remember.
And then you and I were talking about if this keeps following, we're gonna blast off. And
Hmm.
sure enough, we took off.
Yeah, for sure. Some of those things, once they get traction, they'll go for a good, worthwhile
Yeah,
time.
yeah, yeah.
Those
So just
analogs are pretty good.
I just keep watching that one just sort of for the amusement, entertainment purposes. But whoa, what a move!
Hmm. Yeah, very nice. All right, so that's the idea. Now you guys saw some of the timing things that's coming in, that's in place. Let's take a look at the Nasdaq. Nasdaq, so we have 29,484 was the sort of the attractor, meaning if we can settle above 28,028, we were expecting it to at least reach up into 29,484. Let's say we get up to 29,500, it's fine. We're up in this area. Again, we're watching to see if we can settle above it. Now, if we settle above 29,484, just like the other levels we talked about, and it just starts grinding higher or just bolting higher, well, that's fine. Then, let it just speed right into the cycle or go through the cycle. And if we go crazy, then 30,000, we have 30,931 at the upper end if we blow through all
Hmm.
of this, right? But
Yeah.
if time and price comes together, then right in this area towards the end of next week would be the ideal place
Hmm.
for some kind of a change in this trend. And the trend is pretty strong, so it's coming. And I think what's coming is probably not going to be some kind of a consolidation. It's going to be some kind of a correction, and it could be a deep correction. Well, by the time we get to next Friday, that's going to be an important show. So make sure you guys tune in because
Yeah.
hopefully we'll be hanging at highs, and then we can kind of see where things are going. Here's a continuation chart, calendar chart. Not much to say. I think the other targets are better. We'll work with that. But in case we blow through 7,500, we have 75.44. My original thing, I think we talked about it earlier last time. Right around the 74 area, under 75 would be ideal if we can make that happen.
It seemed like
Otherwise,
crazy. It seems like crazy talk when we just got above that 90, doesn't it?
yeah, it does. One other chart I want to look at was this one. It's a continuation chart. Continuation chart, three quarters, three quarters, three eighths comes in about 74.80. I think that's pretty much the ideal number. Okay. So
Hmm.
for the futures market, 74.80 is ideal. If we can do it here or in that neighborhood, give or take a few points around the time zone, I think that would be a good place for some kind of return. I mean, yeah, we're calling out highs and lows here. Just like, last time we called out one was down at the low, and now we're calling it out here. Let's see what happens. Again, don't go crazy. Basically, long as we're above 73.33, we're in pretty good shape. We talked about this level last week. If we can get here
Hmm.
and hold above, and you can see how, Wednesday we blew through it. Thursday we held above it.
Checked it. Yep.
Yeah,
Checked it on
and,
Thursday.
and Friday we really came to check it and reversed hard. So looks like we're going to finish the business around 74.80, which I would prefer. But as we get close to time, it doesn't have to get to the upper level. What's more important is it able to hold the lower level? Idea is not just about getting up into the 74.80. It's really about, can we hold about 73.33? So
Hmm.
watch that number next week very closely. If we reverse here somewhere and we can't get above, or we straddle this and we start to see some weak price action around 73.30, well, what could be pending. So
Hmm.
that's that. Otherwise, we can look for the same similar, price action around 74.80. We can tap it, we can reverse on it. So that's a level there. Let's take a look at the Dow.
Still not making that new high yet.
No, it's not making a new high, and I wish it would. I would love to see by the time the other markets get to their these targets that we talked about today. If we can get up in here and do a false break in reverse, that would be ideal. But
Hmm.
these are all doing the same count. So let's see what happens. Here we have 90 degrees high to high coming in next week on the Dow. That would be a great place to, these 90 counts, you don't get them all the time. So when we do get them,
No.
we wanna watch them a little carefully. So
And
this
what's the
90,
date on that one?
well, it's around the 13th, 13th.
Hmm.
So we'll see. We'll see what happens. A lot of
Getting
numbers.
some getting some
Mhm.
clusters next week, you know? That's interesting.
Mhm.
It's always something you want to pay attention to.
Yes, exactly. And that's why I'm kind of making that central theme here. Otherwise, we're
Mm.
like, well, keep trading the trend. If it settles above, it's great. So, but once in a while, we'll come into cycles, showing up, and then we have to talk about that.
If you
So
look at how about this, Barry? Is this a good analogy? If you look at a stoplight, we may have like a little yellow light here for the next week, right?
I would say it's red. I think it's flashing red. How about that?
Okay,
It's not solid red.
flashing's good. Yeah, because you have to stop, you have to look both ways to see if you're going to
Right,
keep going.
exactly. So
Yeah.
I would say it's a flashing red. You definitely have to look both ways here.
All right, everybody.
Uh,
So now you've got the analogy, right? And everybody drives, they understand. Flashing red
mhm.
light, be careful, right?
Especially if
Be
we come
cautious,
up
be
here,
careful.
to make a sort of double top
Hmm.
potential false break.
Hmm.
We want to really and the reason I talk about that, and it's funny to say those things, but there's a reason we bring it up. I mean, here's 2025, early 2025. Okay, here's the first high that came in, and we thought, well, that high is pretty good. We should get a decent correction, which we did, not bad.
Hmm.
And then
Hmm.
we basically came vertical, and look what we did right here. Do you see what we did on this
Hmm.
bar?
Yep.
That right there on January 31st popped up a reverse. That was a false break. And what did we do after that? Well, we did that really nice little triangle. And I won't forget that. Well, you can see the triangle's already drawn out. We were talking about it back then.
Hmm.
We did
Hmm.
a triangle and it was above this level I had marked up earlier, remember?
Yeah.
And it looked like, I mean, we didn't buy it because it was below the 50% level, right? We're like, okay, this is not gonna, this is not bullish. But what happened was just look, if you didn't know that, you're watching this looks like a nice little triangle, consolidating, perfect triangle in an up market. Where is it going to break? It's probably going to break to the upside, right? That's normally what happens. Triangulate and break to the upside. Well, instead, we broke to the downside, a little expanding triangle, reverse that. We got stuck below, right? You can see the highs of that
Hmm.
was right there in the middle of
Hmm.
that zone and sold off, came back, boom. That was a big move. So where did it all start? You can get fancy as you want, but it was the simple little, false break was the giveaway.
Hmm.
And usually it's like that, usually it's this really not hard numbers. You get this really light count that kind of cluster in a certain way. It's kind of a pattern that shows up. And then you have to take notice. We're talking about this again. We're not talking about this so that everybody, gets out of their portfolios and just sells everything and goes into cash. Although that's probably won't be, you can't lose doing that. But isn't that what they say, Ben? You can't lose taking profit, right?
Right, right,
Uh,
right.
it's probably not a bad. But anyway, that's not what we're talking about. We're talking about the reason for even bringing this up is to see because we trade the short term. So if we can sort of pin a high up in here, we know for how long we can trade the short side. We know we can manage. We can plot out the rest of the leg, and that's why we look for that. It's not for you to guys get in and out of your portfolios or whatnot. Anyway, that's the yeah, that brings up all the dailies. Let me jump to the weeklies and we'll look at the 30-minute really quick. Okay, here's a weekly continuation chart. We talked about this, how we consolidated here for a couple of weeks. And, the idea was if we settle above it, we're going to push higher. Well, we settled above it. We pushed higher and we're going very high. Now, I talked about the 7,500 and I talked about, well, over here is 7607, 7601. And you know what happens with these targets? I can tell you. What happens is we have these perfect targets, but the market always plays with it, right? It can blow through a little bit, it can go a little under, a little over.
Hmm.
So you have to accommodate for that and make sure that you have your ducks in a row. And that's why we have the levels. We only watch the levels when it gets close. So anyway, I would rather honestly have all this business be taken care of around 74.70, 74.74, 74, in this area below 7,500. But let's say we go into like a sort of in the false neighborhood. We get up, break 75 and get into 76. 7601 would be a great area if we really blow out. Otherwise, all the business getting taken care of below this would be amazing. All right, so that's that. Let's take a look at another continuation chart. This is a circle chart, and we spent a little bit of time on this last week. So this week, look at this. In 2 weeks, in 2 bars, we cleared the square, and now we're at the 50% level. So this is
Amazing.
ideal, right? I mean, we're at 74. Let's say 74.43, 44, 74.45, let's say. And we can go a little bit higher. I mean, if we go 50%, that I think is a little bit too high. We can go a little higher. Let's say we hit 75. This is the ES, by the way, 7,500. All right, fine. Take care of the business. So what happened? How do we judge this? It's just like we did the last one. We want the market to be above 74. Let's say
I mean, the weekly
74.44.
is essentially at a decision point on the weekly here.
Oh, absolutely. Well, plus we're 45 degrees up. It's definitely a decision point. Now it's just we're working with price here. Let's see what happens here. Obviously, if we can settle above 74.44, we're going higher. We're going to go for 180. We're going to go way up into 7,700, which would be unbelievable. Pieces raining everywhere, breaking out everywhere, all over the planet. Abundance everywhere, right? Abundant energy and no issues. That can happen. So anyway, if it happens, we have a line. We have a line for everything. All right. So that's if we get up there. Ideally, like I keep saying, we want this business to be taken care of below 7,500 for all this to work. Picture perfect. Plan B, well, we settle about 74.44 until the weekly gets below that. We want to be a little bit cautious, right? We're not gonna sell everything. Okay, this is the cash weekly chart. Very good chart. Let's pay some attention to it. The basic theory is once we clear a square, the 50% ends up becoming the sort of the strange attractor. In this case, we have 74.82. I mean, that would be ideal. I keep saying, under 7,500. Well, this would be just about ideal, right? 74.82 or so. If we can get our business taken care of up in here around 74.80, 80, 82, 85 area, well, perfect. That would be very good. So that's what we're looking at price-wise. Time-wise, we're going to be there next couple of weeks. I would say late next week, early the following week is kind of where it lands. And that's it. Let's take a look at the Russell. Look at this. We looked at we saw the ABCD, which is a great, one of the indices is always sort of terminating on the ABCD somewhere. And Russell was great. Back in before the 22 drop happened, you can see over here, we did a triangle, false break to the upside, came back down, failed, and it all started right there at basically at the tip of the triangle, and we had that the big old bear market, right? All right. So this year I drew up this 50% level, even drew up a little sweet spot here for it all to come to happen. That was 28.23. We're above that now. So going into next week, the scenario is if we can hold above it, well, we're going to push higher. And I think last week I said if we blow through that, then we're going to have Russell 2000 at 3000, right? So 30.41 is the next level. The point is, it doesn't matter price so much when we get to time. So once we get to time, so later, let's say next week, midweek to early the week after, as we get there, it depends which one where the tango is. If we're still here, okay, then that becomes the attractor. If we're up in 3000 area, okay, then that's the level we have to deal with. And going in there, since we're short-term traders, that's what we do. So we're looking at 28.23 to be the marker now, because that's, it's really between 28.23 and 3000, right? 3040. That's the next leg we're looking at. We could consolidate in here. We have a quarter square right around 29.32. Well, that would be great too, right? If we can take care of business below 3000. So that would be that. I think we got a pretty good picture. Let's drop in on the 30-minute really quick. We started out the week just like we talked about, around the 72.28 was a big deal, and you can see we sort of really tested that, ended up in a triangle, and I posted, I talked about, if we can settle above that, we're going to grind higher. Sure, we did, and that got to 7,300. 73.11 was on the board. We consolidated between the two levels, you can see it right there, and broke out early, right to 73.73, which was the next level on the board. Got above 73, messed around a little bit, came back for a cleanup, liquidity sweep, 73.50 area, recovered, got back above. So when you break like that, now here you can see we failed, we went lower. That's great, right? Then the next counter trend should fail, be a lower high and fail. In this case, it wasn't, right? We got very close to it, got on top of 73.73. You can see right there how we sat on top of it, messed around and started lifting off, and that was it. Once we did that, we went on to new highs. We have 74.45 on the board. So we'll watch that for next week. If we get there, fine. So this is, now we're getting into critical territory. You can see after that, the next level is 75.20, and I'm thinking about 7,500 and things kind of finishing up in this area. 74.45 to 74, 74, 75 is a great area to finish up this business. We'll see. We'll see. We might end up at 7,600. Who knows?
True.
Right? We don't know.
Yeah.
So the price is sort of a variable. Time is not. Time is time. That's just that. So let's see where price is, by when we get to the time. Anyway, going into next week, 73.73 and 74.45 is the key level for the 30-minute chart. And this will be updated on the field map chart that I post every day. And Ben posts on the Nasdaq. All that stuff is posted. So follow us on X. There's also a +3 page on Substack. You guys can go check it out. Post the same stuff over there and maybe a little bit more in-depth stuff as we go on. Let's jump on to the Nasdaq. Back to Nasdaq. Well, Ben, the chart looks a little zoomed in, I guess, because you're traveling, right? It's on your laptop.
Yeah, because I'm on a laptop, so I have it a little tighter. But the most important thing you can see is last week we were talking about, we were at this 27,880 level, and we said, listen, once we get above that, then it becomes the full square at 28,606, and if we can clear that, we keep going, and you can just see throughout this advance, all we've been doing is capturing the level, next level, capture level, next level.
Yep.
And if you even break it down to the quarters and eighths, you can see it's just climbing the stairs, every day. So for next week, look at where we closed, Barry, right on the quarter square, right? 29,342. If we get stuck below that, the bulls are going to want to stay on top of the full square, pull back, stay on top of this full square. If we go back below that, then you could say, all right, the correction's underway. Yeah. Right. Exactly. But if we get on top of 29,342, then it's 30,000. We're going to go up to this 50% of the square. And the move has been, breathtaking. If you use the levels, it allowed you to keep on the right side of the market. And if you had longs, to stay in and know where's trouble? Where do I need to get out? And all along here, there really hasn't been trouble. I mean, there's no lower lows at all. So let's take a look. The other one I wanted to show you was the calendar day, because that's at an interesting spot. This is a calendar day off of the 2022 low. And look where we are. That's price and time.
Looks like we're there now.
Right, we're there. Right. No, according to this, we're right there. 29,313 is an important spot. But again, if next week, it's not only important from the squares, look at the 45s. We're right basically at the intersection of those two 45s. What it also tells us, if we get on top and sit on top of this 45, we could ride that up further. Calendar day says we are there. Now, next week, let's see, can we get a bar where we clear, on a daily basis, we clear this 29,313. If we do, then we're going to go again. If we get stuck under, especially if we get stuck under this 45, we could have a decent move down, all the way down here and still be bullish, all the way down here and still be bullish, in the big picture. But I thought that was interesting. I don't show the calendar day every show, but I thought it was at an interesting spot to look at.
That's good.
Also, we got 135 high to high.
Yep.
So you got a decent count there. Here's your weekly. And ever since we broke out of the circle, we said, okay, let's see if we can, because we crisscrossed this 50% of the square when we broke out of the circle. We said, let's see if we can get full bars above it. Well, it just keeps climbing. And right now, weekly basis, 29,779 is the number, and that's 180 degrees.
30,000, here we come.
Yeah, it looks that way, right? As
Sure it
long as
does,
we
man.
don't, as long as we don't
Mhm.
lose these levels, it looks like 30,000 in the Nasdaq. And it's the same view from the monthly. 30, roughly 30,000 is the full square.
Mhm.
So all in all, the Nasdaq is very bullish. Looking at the daily, the important level next week, 29,342. If we don't get above that, then it's 28,606 that you want to watch. And that's it for the Nasdaq.
All right, let's move on to the bonds. Didn't do a whole lot. You can see we're kind of in a holding pattern, so I'm not going to spend a lot of time with it. We are looking, eventually, we are again building a lot of overhead. We've had overhead, we're sitting below that. So looks like on a weaker footing than not. So we'll continue to work with that
Don't get
thesis.
frustrated, everybody, because remember, from big sideways comes big moves.
Absolutely. And here's the weekly. If you look at the weekly, you can see this 114 is the key level. And the reason I said earlier, we're sitting on a weak spot. Well, we're below that, so it's weaker. If we can get above it, it's stronger. And this is basically the weekly, okay? And you can see how we're really kind of stuck in that range. And we have the price action from earlier this year, earlier this year, tapping the exact same 114 level, January 24th bar. It's looking weak. I think it's gonna get weaker, but give it some time. It has to mature. Here's another look at the weekly bonds. I boxed out sort of the range. So up, as long as we're in here, not a whole lot's going to be happening. We're not in a big old trending market. So let it be. And when
Hmm.
we get close enough, we'll talk about it. Moving on to crude. Crude is doing pretty well considering all the stuff that's happening around crude. And at this point, I mean, I drew this little triangle a couple of weeks ago. We blew through that, then the bigger one, and now we have even a larger one setting up. We have this one connecting these lows, and of course, we have the one connecting the highs. Oh boy, when this breaks out, Ben, and I don't care what
Mm.
direction, but it's kind of a big one. So let's see what happens. There's plenty of room to coil. There's plenty of time to coil. But the interesting thing is not that so much right now. The key is this 95, 97 level. We want, if it's above that, I would say it's more likely to push higher. If we're below that, it's more likely to consolidate and push lower. So the lower boundary really is the 79 to 83 level that we have on the board. This zone right here, and you can see all through all this, even the spike, we held that. So that's the lower boundary, and the midpoint is really this 95, 97 level. Between that, it's not weak. It's just let's just say it's idling. And if we get above 97, 95, 97, settling up in there, we could run up in a hurry. So use that. This is a very important pivot going forward. So watch that. And
As we talked about too, Barry, there's so many markets that are, getting their direction off of crude that when this huge triangle breaks, it's going to be like a crazy, crazy moves in all these different markets.
yeah, it's different every time, and I can't imagine what this is going to be like. But by the price action, you can tell, and the
Hmm.
it's compressing pretty hard. So and we
I
have
mean,
time to go.
right.
Yeah,
And you got risk, you got bonds, you got the dollar, you got the metals, everything is keying off of crude right now.
right, right. Yeah, they're all in critical places. All right, here's the weekly crude. You can see how well behaved it is. 78 is our square, the 72 degrees up from the low. So we're holding well above that. So remember all of this back here, we were talking about how, once we get above 78, that's when we start running. Well, we got above 78, and guess what we're doing? We're kind of consolidating here. This is not bearish. We're
Mm-mm.
not consolidating below 78. We're consolidating above 78. And what happens when we settle above 114? Well, we're going to consolidate up here. And I don't know where the actual trouble begins, but if we get above 114, then I think 150 is not too far. I don't care, what the basic idea is whatever is happening in the news, charts the charts, and really the next level is 150. But in order to do that, we have to settle about 114. If we do that, obviously it's going to be boiling towards the 150. But long as we're in here, it's consolidating, but on a bullish tone. We looked at the daily, we saw that 95, 97 is the key level to watch for the short-term moves. All right, so that's crude, very important. It's a very simple way to describe it, but I think it's very powerful because it's working amazingly. Let's move on to gold. Gold held the square here. We are still consolidating. I remember talking about this low coming in, and we said, hey, I think we have a low in place. So it held, ran up to the quarter square. We had 49.29, held up there, came back to the square level. So what's happening? Well, this is bullish so far. If we can consolidate above this 45.60 level, I think we're in pretty good shape. You can take the lows here. I mean, nothing wrong with taking 45.10 to be, draw a line there. As long as we're above that, gold is sort of ready to go. It's idling on a higher level because you're on a new square. New square has a big range, and the next, if we decide to go all the way, that 6,000 is the next level. And that's a grand level to get to.
You know what, Barry, take a look also. I was messing around when I was doing my review with gold. If you draw a horizontal line or use the quarter square as a horizontal line and then draw a trend line from the low, you got an ascending triangle.
Ascending triangle right here. If you
Yep.
do this,
Yeah,
that,
and your vertical
yeah.
lines right there.
Mm-hmm.
And that's a bullish formation.
That is. And I just noticed when you were talking about quarter, we're 4 quarters up into the high. So if we put the square here, you guys maybe it's a better way to monitor
There it
this.
is. There it is.
It's a lot better,
Look at
right?
that.
That
Yeah.
gets rid of the noise here. But you can see we're basically in a quarter square. And that level is still good. And we're coming off of a completely new level. We got gold framed pretty well, guys.
Yeah, that's a perfect frame right there.
To frame the low again, let's say 45.33 gold support, and resistance is 48, say 4,900. Okay, 4,900 for resistance on gold, 45.39 for support. We'll work with that. Let me finish through the metals. Silver worked out just fine. We talked about all the 72-degree 144 harmonics we're working with. 72 was support. We held above that, ran up to 81. 81 basically held the market. That was a resistance. So, we're between that. Once we can settle above 81, we have 90 as a target. So for now, we can see we put a lot of time in between 72 and 81. So we'll see how that continues. You guys kind of get
Similar,
the idea.
and again, a similar formation there is that, you can find an ascending triangle on that, which is also bullish.
Yes, true. And as soon as we can get above that 81, you can see how it's kind of compressed below that.
Yep, it'll fly. Yep.
It opens up that gateway up into 90. Moving on to copper, did amazingly. Last week we said, if we can hold above this 580.89, we can go up and test the challenge the 50% level and the high. And sure enough, we're almost at the 50% level, which is 635. And well, we could have a potential ABCD, but copper's strong. The fact that we left this, we tested it right there. We started moving away, and now any kind of a pullback holding above this 611, 611. There you go, 611. Very strong. Copper's in a very strong spot, and this is resistance, so it's possible we come back and retest that 611. Otherwise, once we clear that, it really opens up all the way up to 680, 685 copper, which is not cheap copper.
No.
All right, let's take a look at the weeklies. Weekly gold, not a whole lot to add here. I think we're still tightly consolidating. I think 48.15 is the upper boundary. If we can get above that basis the weekly, we're definitely going to move higher. into the 5,000. So keep an eye on that. That's all for the weekly. Let's look at the weekly silver. Looking very clean, one of the cleanest charts we have for the metals. 84 is the level we need to get above, right? So 81 is the level we have on the chart. So if we can get 81, we press through 84 on the basis of the weekly. That really opens up all the way to 101, 102 on the weekly chart. So the numbers we talked about earlier were the daily, this is the weekly. Looking pretty good. You know, the 72 held, which is really about, on the weekly, it kind of converts to 75. So 72, the $3 range there. If we can continue to hold that, we punch through 81 on the daily, 84 on the weekly. We're on the way. And consolidation looks about done, you know, like we've matured through that. Looking at copper weekly, wow, what a strong reversal day, a week, right?
Yeah,
606.
big week.
Yeah, right. Look at that. So 606 is the level we want to watch. We slice through that, which means long as that support holds on counter trends, we're heading towards 650 copper on a basis of the weekly. Looking good, very good. And this copper chart's been super helpful, super useful. Metals doing great. Must be some reason, Ben.
Yes, sir. I noticed it, and I'm going to talk about that when we talk about the commodities, but money went into the metals strongly in the past week or two. Yep.
Yeah, especially copper. Look at that.
Yep.
All right, moving on to the dollar. It's looking a little sad. We haven't done much, just kind of moping around down here. You know. All right, but it's all right. I think it's bullish overall because you know we're not tanking, right? We're being held probably for good reason. We've been held probably for good reason, but long as we're above 97, I think we're okay. We're still good enough to make a run towards 99.50. We have to recover that, you know, just like we tried to do in March. We can get above 99.50, push through or gap through the 100 area, then you know we're really cooking. But for now, I don't mind it coming down into levels because from that level we can trade up. You know, at least we got a trend from there.
Sure.
So watch out for things getting flushed out, tested. You know, around 97. You know, we had that structural support here. We're just sitting on top of it. So it's possible we dip into that a little bit. You know, 97.50 maybe, but 97, 97.50 is the level to watch next week for support. Looking at the euro, well, our 1790 is holding. We tapped it on Thursday, pulled back. You know, euro is gonna really get it here in one of these days. So because mess around and find out, right? So it's really messing around here sideways. Both sides have worked, but you can see the sell side has worked really well, very, very fast. Anyway, let's watch 1790 going into next week. Unless we can settle above this to test higher, to test the full square, which would be around 1937. If we can't test there, then I'm expecting it to be, there we go, 1937. If we can't break 1790, then expect it to go be in a weak soft position. And if we break 1642, which is the 50% level, then expect a weaker euro. We'll jump into the weeklies in a second. Let me just cover Bitcoin.
Look at that, right into your landing zone.
How about that, right? We called it out, guys. Hey, we called the high. It's like, got to do it, right? And you know, otherwise, what's the point? What's the point of all this? We can't have some fun every once in a while. All right, so 68,580. We talked about. Look, if we can, as soon as we clear that, and counter trends are holding above it, we can expect it to go test this 80,000 area. But 83,000 is the key level. A lot of resistance about that, and that should be sort of a temporary high. You know, that's kind of how I'm looking at it. And I put this timeline saying this 5.7. Now I can't remember if I did that during the show or after, but anyway, that's definitely a line. But the one I definitely did during the show is May 14th. Oh, look at that. That's on the 14th next week also. So it's possible we go back, bang up in there, do a false break. But anyway, this 14th level, price level of, you know, 82,000, 82,000, 83,000. So that's kind of the spot we're watching. Let's see what happens. We're not done with it. You know, On the other side, obviously, for the upside to continue, we have to settle about these 83,000, at least 82,000, and hold that level. If we can't hold it and we can't regain 80,000, let's say, then I think we're, Bitcoin's in for a little bit of a correction.
Mm-hmm.
Not shy about saying that. All right, let's check the weeklies. Weekly dollar, this expanding triangle and all these businesses looking awfully messy. It's better to
Mm-hmm.
really kind of wait for the right signals. And this is not a right signal. If we were ready to go, we would have bounced and gone just like we did 3 weeks ago. We're not doing that, so it's possible that we sort of really churn the zone a little bit. Let's wait to see what happens. Basis the weekly, obviously we need to clear 98.25. If we get stuck below 97.83, let's say stuck below 98, well, we're kind of in a very messy zone because anything can happen in here, meaning we can easily go after stops or drop lower and then reverse, very fast reverses like we've had in the past. So let's watch it carefully. But we want, as long as we're above 97, 97.50 basis the weekly, we're in good shape. But if we slip through that, probably not a good sign for the dollar. So let's watch what happens. 98.25 is the key level for the weekly. If we can get above that, then weekly is going to be running again. Euro 16.54 is a key level, and you can see we're just sort of tapping right on top of it, just holding above it. I just feel like this is more like really trying too hard, trying hard to stay above versus we're starting sort of a, ABC and running hard in the other direction. Anyway, let's work with what we have. You can see we're basically reverting right around the 16.54 level. It's a really important level. If you just drop that line and look at the price action above and below it, we've been all over it. So we want to see, obviously we want, for things to continue, we need to get on one side and not be able to get through, fail, and then we'll have some kind of a trend. So right now we're in that kind of a phase, right? We broke to the upside. And if we continue to hold, move higher, counter trends hold above, reverses hold above this level, this price action, I think then the euro can run when the pigs fly. Maybe.
Mm-hmm.
Let's see. I keep making fun of it. Let's see. Well, watch the dollar dump and the euro run. I'll be eating my shoes. Anyway, that's what I got, Ben. That's all the weekly charts.
Excellent.
Yep. Anything? Well, let's go look at the commodities. You got a few things to
Yeah.
talk about?
Yeah. We got one for
Coffee,
sure.
coffee was kind of important this week. So let's take a look at that.
Yeah. Yep. All right. So we're going to cover coffee because it did do some interesting things, but let's just briefly talk about the others. We're not going to cover them because there's nothing actionable yet. The grains, wheat, corn, and soybean all made highs and they're correcting. So we have, key levels that we talked about in last week's show. On a monthly basis, you want to watch for wheat, 595 on the pullback, for corn, 463, and for beans, 1202. So those are the levels you want to monitor on a monthly basis as we see how this correction plays out and what setups we get. We'll bring them back and highlight them on this segment. If we look at the softs, sugar made a nice move higher and has pulled back. So I think this is kind of on a daily basis. This is like a wave 2 pullback. Let's see how far it goes. And when we get a reversal, we're going to want to jump back on sugar. Cotton just keeps chugging along. It pulls back, structurally beautiful, and then goes and makes higher highs. On cotton, if you're long, 85.10 on a daily basis is important. 84.53 on a weekly basis and 88.95 on the monthly basis. And we're right in those areas. So don't be surprised if we stall a little bit. The other side is if we can push through and sit on top of any of those levels, we're going to go again in cotton. Cocoa, we had a fantastic move up there. Peaked out a little bit because on the daily we did a full square, a 54 by 54 square, pretty nice square. Got up into sort of weekly resistance near a full square on a weekly basis. let's watch the next pullback. I don't believe it's done. I think there's going to be another setup. So we're watching that. The metals we talked about, money's coming in there. Pay attention to those ascending triangles and the level that Barry was talking about at copper, because it looks like the next bull run in the metals is not that far off. And now that leaves us with coffee. Let's talk about coffee. Um, Coffee's one we've been tracking here, trying to find this low. We had a decent square there, had to move up. We wanted to see a higher low off this pullback. Didn't happen. But what did happen this week is we've got a false break setup. We've got a false break setup here, which we'll see if that gets fulfilled next week. And we also have a very important square on a daily basis, which is 144 by 144, not from the peak here, but from the high before the high. And a lot of times, Barry talks about this often, the point you want to measure from is not a false break high or a false break low or the low or the high. Sometimes the timing is masked a little bit and you go to the low before the high before the high. There's all kinds of different things, but you want to check always around those turn points, because you can find really good time cycles by doing that. And if we check the high, if we measure the high from here to here, we've got 144 by 144, which on commodities is a really big cycle. So does that mean, oh, willy-nilly, let's go in and buy this low because, you have that square? No, we want to see evidence, right? This is about as early as you can get on a trend, right? Because the low was yesterday, the day before today. So now what we want to see is let's start seeing some strength up. If we can get up into here, pull back, and then give us a higher low, then the next move higher could be not only wave 3, but break this big downtrend line. So there's a lot that could be coming in the setup that we're going to get here. I'm just alerting you to it because we'd like to, show you the methodology of how we try to find these corners and these opportunities in commodities. And this is a setup that you're seeing here on the daily in coffee. Barry, anything else you want to add here on the daily before we quickly look at the weekly and the monthly?
No, nothing to add. I think you covered it well. I mean, the key thing is if you guys trade this, these are the times to really watch it closely and catch them at the right spot.
Yeah, because the setup's there. Now we have to see, does price action give us more evidence and give us higher probability that, yes, that was a false break low and we're going to turn, right?
Mm-hmm. Yep.
First thing is it's got to take out the high of the false break bar, right? And that would be right here. Let's see what that number is. So next week we want to see, can we take out the high of this bar here, which is around 284.20. So that's something to watch next week.
Mm-hmm.
Let's take a quick look at the weekly. One of the things you'll notice here is that we have a half square at 279. So that's a key spot. Next week, can we straddle that half square? Because we closed below it. Next week, can we straddle it? That would be the best case scenario. We straddle it, close the week above it. Then you can see within the next few weeks, we're probably going to be able to bust this big downtrend line. And again, monthly, weekly basis, that attracts buyers, that attracts people that, are looking for these turns. So the setup is here. You can see this area has been visited multiple times on the way up and the way down. So it's a pretty key level that we want to watch. So 279 weekly basis next week. Let's watch that price. And then here's your monthly. The monthly gives you a really, really nice view of that false break, doesn't it, Barry?
Sure does. Sure does.
Yeah, you see, we had a low here, a little lower low here, and a little lower low here. Again, sharp downtrend line. Within the next few months, we break it, and that could be, you get sort of these massive moves once you get those downtrend lines broken. Like here's an example of one. You draw a line here, you see what happens when it breaks. you get a nice move. So all in all, it is super early. You cannot get any earlier than this. The only way we could be earlier is if we were talking yesterday,
Right.
because we did an inside bar today. But
Hmm.
it's it's how the methodology we use. It's how we look for these sort of spots. The evidence is beginning to mount. We need a few more pieces of evidence to come into play, and then we're gonna have an opportunity to trade. Meanwhile, watch cocoa for some pullbacks, watch cotton, watch sugar, watch the grains to see how they deal with the weakness we saw coming in.
Hmm.
Crude oil, Barry reviewed that. Nat gas is also perking up a little bit. Still too early there, but there are signs of life, that a potential bottom could be in. So the money is not leaving commodities right now. It looks like it's sort of moving around within the commodity space. But as these different groups within the commodities start firming up, money's going to come into them, and this is I don't think this is a short term, run we're going to have here. I think it's a multi-year run we're going to see in the commodity. So we really want to pay attention as these things begin to bottom. Well, that's it for this week's show, Barry. It was a
Yeah.
fast one, but one
Hmm.
that had a lot of good information in. I think people realize now how important next week from a timing standpoint is going to be. So we need to really have our head on a swivel and have our eyes open, pay attention to price action, because if these time counts do become significant, price will tell us. And as the price, violates certain levels or gets above or stays below a certain level, we'll know what the effects of these cycles are. So rest up over the weekend, be ready. Great job, Barry. Good job on the show as usual, but especially good bringing in the timing and those important cycles. So everybody have a great weekend, and we'll talk to you next week.
All right. Good job, Ben. And I hope you guys have a nice time in California for the rest
Yep.
of have a nice weekend. And you guys have a great weekend also. And we'll catch you next week. Catch our post on X and also Substack and YouTube where you guys are watching this. Please hit the likes, subscribe, and do all the
Yeah, and
things.
if you watch the videos every week and you're not subscribing, just hit that subscribe button. It helps us a lot, and we would appreciate if you do that. We know a lot of people are watching it, but make sure if you do, you subscribe, because
Subscribe.
that
Yeah, that
helps.
helps a lot. Yep. All right, guys. Take care. Take care, Ben. Talk to you
All
soon.
right, take
Bye-bye.
care. Bye.
Ciao.